All right. Can everybody hear me before it gets started here? All right, perfect. All right, I'll get started in probably 30 seconds here. Now we have another SMT. Nice. If this is able to hold, I just expect, continued higher prices. But I'm pretty much protected now because I already took profit at this high, the equal highs. For those that know I'm in a trade, that's what I'm looking at right now. We'll see. So let's start. I'm just going to delete all my drawings actually and just start from a clean slate. All right. Let's get started with our, I guess, daily outlook. So good morning, everybody, and welcome back to another free live stream. So in today's analysis, I was doing some pre-market research, and I would like to see higher prices overall because right now our weekly range, we are already within 20 to 30% of our weekly range. On top of that, we have a 4-hour fair value gap resting right here. We have a 15-minute SMT on the low. We have a 1-minute SMT on the low, and now we are creating a 5-minute SMT on the low. So I would like to see some higher prices if possible. I'm keeping an eye on the 15-minute chart as of right now because if YM's able to close below this London low, then I would look for, this SMT on the lows to be invalidated pretty much. So as of right now, it's still kind of developing, and we'll watch it as it develops. Overall, once again, because we're already 20-30% into the range, I would like to see some higher prices, especially with this week's manipulation, the initial manipulation that occurred on the lows right here, right? So if you project that out, it lines up perfectly with previous month high. So that's pretty much my idea for today. If we are able to get SMT on the highs from that, then I'll look for lower prices. And would you say that a partial close is a no-no as it will mess with RR? No, I always take partials. Always make sure you're taking partials out of low-hanging fruit. I think what is a big no-no, in my opinion, is if you take too many partials. That's when it becomes a problem, because you're taking one partial, two partial, three partial. Then eventually, like, your RR is like, if you just full TP'd somewhere, you would have better RR than if you just partialed one contract every 3 points, you know? So always feel free to take off some of your position at key levels. Like, for example, this morning I took this long and I saw these equal highs at London high, and so that's where I took my first partial. That's 66% of my position is already off right here, and then the rest is at below these candles right here. Right? There's no sound. Wait, do you guys have sound? Oh, okay, perfect. That makes sense to everyone though. Type 1 if that makes sense. Type 2 if you have questions. Or just type your question, actually. I'll be here. Okay, perfect. So yeah, that's pretty much all I'm like really waiting on right now. I think we also are in the process of forming. This is a nanocycle SMT. I don't know if you want to use it, but just in confluence of the 5-minute, that would be the confirmation pretty much. So at this point in time, I would like to see price start to push higher if it is bullish still. If not, then I'm just probably going to close my position. Wonder how much of a difference that is. 3 points. Okay. One thing that I wanted to bring your attentions to is that we do right now have a previous month high SMT. So let me just turn on my weekly quarters. So here's our previous day high, and I want to see how if we're even able to get up here. And I was assuming that YM would be the one that wants to get up here because it's, you know, in terms of proximity, it is technically the closest to it. And so if we are able to get up to previous day high, I'll just annotate this for you guys. We have an SMT, if you look at the daily chart, we have an SMT right now with previous month high. Or not really previous month high anymore, but let's just say summer's high. Yeah, there we go. Summer's high or all-time high. And so because we have this SMT, I would look for either a previous week high SMT, which we don't have as of right now, or I would look for a previous day high SMT. And so if we're able to get up there and create that, then I would look for that trade back into the weekly range. And that would be your TGIF setup. Where's the invalidation to go lower? I mean, I guess if I get stopped out, but even if I get stopped out, I don't really have an entry to go lower. I just wait, honestly, for higher time frame to give me something a little clearer. Because as of right now, our higher time frame is bullish, right? And so until the higher time frame tells me that we're going bearish, that's when I'll flip. But once again, we have this. Oh wait, we do have. Sorry, it was previous month high. This one right here, previous month high right here. And so from this SMT, I would like to see if we can get, you know, lower prices if we create an SMT with previous day high as well. I have a question. Okay, let me read through everything. I think I'm like missing out on all these questions. I'm sorry. Okay. What's my current drawn liquidity? I would look for a previous day high because once again, I want to see that SMT created. But if not, then I'll see how price develops on the higher time frame. Then would you say, okay, I already read that. How about weekly SIBI above? So that fair value gap, I've been targeting it, but you know, if it doesn't want to get tapped, then it's just not going to get tapped, you know? You just got to go with what price is telling you right now. Where is the invalidation? I think I read that already. Stop loss, I just put it below these candle lows. I have a question on the daily SMT between NQ and ES. ES took all-time high, but NQ is still pretty low. That order gave me bearish bias for today. When would I still look for bullish prices? So honestly, like I think your reasoning is completely valid. It's like taking all-time high, and then we also have a previous month high SMT. Like that could be it, you know. But once again, it's just because my model is here. I'm looking for higher prices, and then that narrative that I was talking about, right? Let's see what else. How do you trail your stop loss? Where do you put it? So I like to trail my stop loss based on order flow. So it's like whatever price is respecting. So it's like, for example, this fair value gap right here. If it's respecting this fair value gap, then my invalidation is if we can flip, if we invert this, right, close below that, then I'll get out of my trade, for example. And then I don't have to take the full loss on that last runner I have. So I always pay attention to order flow. Where is my guy Jay these days? Yeah, he got voted off the streams. Cause whenever we stream together, people are saying that we're creating too much noise and like bantering too much. It makes it confusing, and I completely understand that. So, you know, we'll have our time where Jason's on, like we're just bantering and stuff. But when we're trading, it's just we gotta focus up, right? How many inches in my monitor is 57 inches. Use 15-minute fair value gap. I use the. How do you place your stop? I use 15-minute fair value gap. I use the candle low or high. You always want to use the first candle in the formation of the fair value gap, or that's how ICT teaches it. So if you're using this fair value gap, for example, then your stop loss should be at this first candle low, right? That creates the fair value gap, supposedly. So you got equities open in 3 minutes, so I'd just be patient here if you're not already in the trade. Bullish and bearish. Yeah, we have an SMT with London high as well right now. Jason's in a short. I'm still in my long from this morning, so we're kind of going against each other. If that London high SMT is true though, then I'd look for lower prices as well. It's just I'm already in a trade, so I just gotta stick to my idea. You have the Samsung Geo 57-inch. Yeah, I have that one. Nice, good stuff, Tony. Got equities in 1 minute here. I just enter on NQ no matter what because I'm kind of lazy like that. But you know, you can like experiment with different things if you'd like. But personally, I just execute on on NQ. So let's see what happens here. 5 seconds for equities open. I do want to see what's happening on the 1 hour chart. Previous day low seems pretty far away, I think. Yeah, it's very far away actually, so we'll see if this 5 minute this 5 minute SMT can hold. If not, then I'll just get out of this trade. What's going on here? Paying attention to this fair value gap right now that got created at the start of equities open and see how we can react to this. See if we want to go past this previous high. If we do go past that, can we displace past it? And once again, if we start disrespecting bullish order flow, I'm just gonna get out. I don't really want to get slipped here if it does end up running against me. Looks good so far. So you see how we're just paying attention to order flow, right? So I'm actually trailing my stop to this low now. So I'm paying attention to this low. I'm going to trail my stop here. If we get all the way back here, like I don't want to be in this trade anymore. And so if we're trading above previous highs and if we're able to displace, I want to see these gaps once again being respected. I want to see this one act as a breakaway because we have a breaker here. We have a fair value gap up there. If we tap back in that, I'm just going to get out. See if we can invert that. Yeah, I'm just gonna get out here. That's my exit. All right, I'm done with that trade. So I'm up overall $300 times 20 accounts today. This is pretty good. Yeah, but that that's my trade for today. Who do you guys want me to continue? Okay, type 1 if you want me to continue watching price, or type 2 if you want me to do a trade recap. Okay, so continue watching price. Perfect. So right now I'm paying attention to this gap right here on the 15-minute. Right, we traded back into it. We created a small little SMT on the highs. Not 100% sure how to really interpret that, but because we've invalidated that London low SMT, I think that lower prices don't look terrible. But if we do end up going lower, that means we're creating a seek and destroy pattern, right? So you're gonna start looking at this. You're gonna start looking at this. That's seek and destroy, right? Where it's just like a widening wedge. I think that's what a chart pattern is. So if that occurs, then I'd just be looking for that seek and destroy, which is not very great for the trading. If we continue to push higher here, I'm fully out of my position. So if it goes without me, I'm completely fine with that. I've already made my money today. And so that's something you guys, like, psychologically, you just have to be able to accept, right? I took my money, I'm happy, I'm out, right? So continuing on with the analysis is just, if we do end up respecting this bounce price range or this fair value gap, that's order flow, right? And if we can start displacing lower, then obviously we're looking for lower prices. If we continue displacing higher, I think we're looking for previous day high and also the weekly objective that lines up with the -2 standard deviations that would end up being our previous month high. And you know, if we're unable to take out previous month high, only take out previous day high, then there's your stacked SMT on the highs, and you can look for lower prices. Once again, we have very nice engineered liquidity resting down here, so would not be surprised if this is gonna flip into a market maker sell sometime soon, right? So I think this week, these past 2 weeks have been really good, where we were able to dissect this plummet lower initially from starting from like September. We took this short on that Monday, I remember, and then we saw the SMT here form on the monthly cycle, the weekly cycle, right? And so we're looking for a market maker buy model. What's the target? Well, we had these equal highs that were engineered prior to that plummet, and so that's what we were targeting. Past that high, what are we targeting now? I want to see this original consolidation high, complete the market maker buy model, preferably. And so that's pretty much what I'm looking for as of right now, which is previous month high as well. That makes sense. So everyone, type 1 if that makes sense, and type 2 if you're confused. Okay, let's go back and read some questions. Yeah, for SABP fam here, quick question. How do I confirm a valid SMT? Do we need to form a 3-candle formation or short-term swing high or low? No, you don't. You just need 1 candle closure to confirm it. But always, I like to use higher time frame to lower time frame SMT to confirm an SMT. In a bullish scenario, if there's SMT based on SMT, the weaker one creates. Oh, I already read that. Okay. But you know, if you look between midnight and 6 a.m. EST for London session, all 3 assets took highs and lows of London, so I can't see any London session SMTs. Yeah, so I actually traded I entered my trade at like 7:45ish around here. And so that's where I entered my trade. I took my long and I took my first partial here, right? And I saw we drop back into the range. So that's where I took my second. I just full closed, like where I was tape reading with you guys. Somewhere around here, I just full closed. And so I ended up profiting like $300 times 20 accounts. Which is like I'm fine with that. I'm happy with that. It's just like another thing is my trade has been invalidated itself because just like you mentioned, you don't see that SMT on the low anymore because this was formed at 9:15 candle, right? And so once that created, I'm no longer interested in this trade. So I'm just trying to get out and protect myself, protect my capital, right? Because we've already taken this. Hope that makes sense, Vernon. So my model was there, but then it got invalidated. That's why I was so eager to get out of the trade because my trade idea in itself was invalidated, right? So if my trade idea is invalidated, I'm getting out. I'm going to protect myself. Been in a live, haven't been in a live in a while. Yo, welcome back, Gino. How can we use weekly, daily, 90-minute cycles altogether? Just look for SMT. That's what I do. I just look for SMT. There's obviously more to it, but just look for SMT. Trust me. If you just look for SMT, you're banking, bro. Last week was kind of confusing. This last week, yeah, it definitely was a very confusing week. It was a tough week for sure. But, once again, like once you piece together the narrative and everything, it just makes sense, right? Because you have this market maker model, right? Right before this distribution phase, you started having an accumulation phase. Well, what made this price movement go higher is you had an SMT over here, right? As an SMT, right? And we start expanding higher. And so now I'm looking for, after expansion, retracement, right? That's why yesterday I was looking for bearish movement, which we actually ended up like pushing higher a little bit more. But today, overnight, we got that retracement. And that's why now I'm looking for bullish price action again, right? Because after expansion, look for retracement or consolidation, and then look for continuation. Especially when we just took out this distribution phase right here, right? Retracement. And now what's our original consolidation? The projection, right? So -2, -2.5, that's what I'm looking for. I hope that makes sense once I put it into like the narrative and the context of price, right? Very important to keep in mind the higher time frame. Higher time frame more important or emergent? Higher time frame SMT is always more important. Always. That's your directional SMT, remember? Directional SMT, and then your lower time frame SMT is your momentum SMT. You need a directional SMT as your bias, and then you need momentum SMTs to actually push price in your favor. I don't know if SMT is valid or invalid. Stacked SMT. So higher time from SMT to lower time from SMT. That's how I confirm whether a SMT is valid or invalid. Ethan, hi. I have a question. Let's suppose I use external internal to analyze the weekly time frame. Suppose price in the weekly has just taken external range liquidity. We expect price to draw to internal, but does not then respect internal. It continues to take external, changing from bullish to bearish. What is then my next draw in this case? So every time you take an external, you're looking for internal. And if it plummets through that internal, going for the next external on the opposing end of the dealing range, it's fine. You just wait until it takes that external range, then you target internal range again. And if you know that order flow has shifted from, let's say you were initially bullish, if plummets through internal range liquidity to the low of the range and then gives you your market structure shift, then you look for internal range again, and then now you start looking for bearish external range. So sell side liquidity back to a bearish fair value gap, back to sell side liquidity, back to a bearish fair value gap until you took your trade into a bearish fair value gap. It pushes right through it, creates your market structure shift again, and then you'll just rinse and repeat, right? You always wait for momentum SMT to enter. Yes, always. Your thoughts on sequential SMT by trader day? Absolutely love it. It looks like 15-minute SMT is at play. Sorry if I wasn't paying attention. Yeah, 15-minute SMT was at play initially, but it got invalidated. That's why I got out of my trade personally. And you know, whenever you have conditions like this, like once again, you can see the seek and destroy forming right now. That's why I got out of my trade. How many entry models do I have? Infinite. Actually, no, I don't want to say infinite. I just say I have one entry model, but that one entry model stems to literally everything ICT teaches. So I guess everything. Is there any SMT that we should pay attention to right now? Not that I'm aware of. I don't see anything that I personally would be interested in as of right now, because my trade has already played out, one, and two, the trade idea itself that I took profit on got invalidated. So if it's invalidated, we have no SMT. I'm not interested at all right now. And I'm just gonna let price develop, become clear again, and that's when I'll trade again. Now, obviously, you can drop down to lower time frames and you'll find a bunch of different SMTs on the lower time frames. But remember, the main key thing is to have higher time frame narrative, right? Without higher time frame narrative, you're just shooting in the dark, you know, whenever you trade. Unless you're a scalper, I think that's completely fine, because once again, everything's fractal, right? If you're a scalper, go for it. But once again, for the way I trade, I like to catch the daily expansion. I like to try to catch the weekly expansion, the monthly expansion, right? So I always have to pay attention to higher time frame narrative. And when your higher time frame aligns with your lower time frame, that's when you get the clean explosive moves, that high probability setup that you're really looking for. And that's where patience comes in, is understanding that you have to wait for these setups to develop. And one thing that a guy was talking about in the psychology call within the private community is he was talking about an analogy that was super cool to me. He said that every trade is like whenever you're trying to go for a train ride, right? And so every train is scheduled. Well, if you miss the train and you start trying to chase the train running on the train tracks, you're never going to catch that train, right? The smarter move is just wait at the platform for the next train to come back. And so when you think of it in that perspective, you're no longer going to be chasing trades. You're going to be letting them come to you, right? And so until price is obviously going somewhere, very blatantly clear to you, it's low probability conditions. Because if it's not obvious to you, it's low probability conditions for you, because you're going to be guessing. And that guessing is going to, you know, start creating emotions within you, and you're going to start making really dumb mistakes that when you finish your trade and you lost a bunch of money, you're going to review your trade, be like, why did I do that? And that's the reason, because you're just blinded by your emotions, because you weren't confident. Because if you had a model you were confident in, you don't care if it wins or loses, because you know the long-term expectancy of it. Are you in a trade? I already finished my trade this morning. What are the tax implications for prop firms in Canada? I just get taxed based on just income. What's it called? I forgot what it's called. Something income. It doesn't count as a capital gain, or at least I'm not aware of that. I have to ask my accountant. Which entry method do you use after SMT? I just enter on SMT, I'll be honest with you, but I think the best way is like inversion fair value gap. Or I like to use true market structure shifts, and what that is just like looking at a previous fair value gap that has a swing point within it, and that is your market structure shift. That's I usually like to use that most, but typically I'll just enter on the SMT itself. New 15-minute SMT. Well, it's not with London low, so I wouldn't really trust it, to be honest. I think right now there's for me personally, for my model, there's literally nothing for me to do right now. Because A, I already took my profits. B, there's quite literally nothing in analysis telling me to do anything. I don't know if price is going higher or lower right now because I have no valid SMT. Just on SMTs alone, I would say like maybe lower prices because we've invalidated London low. We have a very small SMT on the highs, but yeah, I don't know. It doesn't to me because I'm unclear, and this is like this fits perfectly into what I'm saying right now. Is because I'm unclear on price right now. It's low probability to me. I'm not gonna do anything in the market because of that. I got you. Do you recommend us start trading at 6 a.m. then so we can take advantage of London high low SMTs of SMT? You can if you want, but I will tell you that it is lower probability if you trade pre volatility injection. Your volatility injection majority of the time is what creates your highest probability SMTs. However, if you have your model present prior to volatility injection, then why not? Just make sure you're managing your trade well. Where was your hard time for SMT again in year 740? Yeah, I'll show you. So if you go to replay mode, it was because it got invalidated. But we had this SMT here initially. Right? So we had this SMT right here. This was my higher timer SMT. 15-minute SMT within a 4-hour fair value gap. This was a 4-hour fair value, something around here. If I remember correctly. Something like this. 4-hour fair value gap, 15-minute SMT into the 4-hour fair value gap. And then we confirmed it with 1-minute SMT. There was also a 5-minute SMT, but I used the 1 minute because it looked a little cleaner. And then that's where I started longing from. I actually missed the best entry here. I would have probably entered right here if I could, but I got to my desk a little. I didn't get to my desk late. I was just doing other work and I didn't pay attention that this was already forming because normally my model forms after market opens. So I didn't expect this at all. But once I saw I was doing my pre-market research, I'm like, wait, this looks like a really good opportunity. And so that's where I entered my trade. I went for my run, and then when I got back from my run, my first TP was hit. And that's pretty much it, right? It's just understanding my model, executing on it, let it run. That was literally all I did. Do you ever trade FX pairs or just futures? I only trade futures. I think Forex, in the past, I used to like swing trade it, but I've mainly just focused on index futures. What's the difference between midnight open and 8:30 open? So I don't use 8:30 open anymore. I actually use 7:30 open, and Midnight open is still the same. I think the thing is 7:30 open for me is for the session specifically. That's the opening price of the session. And then for midnight is the opening price of the day. That's how I look at it. So I'm assuming you took your trade after. No, I didn't. I took it before the volatile injection because my model was just there. So I just executed. Can we check 1 minute? Well, there's nothing on the higher time frame telling me to do anything, so there's no point for me to check the 1 minute, right? I can check it, but I'm just telling you there's nothing on the higher time frame telling me to even do anything. So and also looking at this price action now that I'm on the 1 minute, what am I even looking for? Right? I will admit Fridays are typically tougher to trade because it's the end of week. This feature is better than Forex. I don't know if it's better, but I see everyone from Forex switching to index futures, so clearly I've been on the right market. And everyone that switches over, they're like, "Oh my gosh, futures like easy mode." Can you please review the 15 minutes? I reviewed it like a few times. If you want to just rewind the stream. Good stuff, Tony. Yeah, see, everyone that used to do Forex, I'm telling you, they just love index futures. There's a point in my trading career where I was like, maybe I should trade Forex. Everyone's trading Forex. It's just like, I want to be like everyone else. Like, went in Forex, like this looks terrible. I assumed that I didn't know what's going on because I didn't trade that specific market. But genuinely, now that I know what's going on, like it just does not look that great. I'll be honest. It doesn't look as great. It's just choppiness. And this is the weekly chart too. Actually, this looks so clean. This run lower. I don't know. No, my Bitcoin long. Yeah, but once again, as of right now, there's just, in my opinion, not much to really do. If I had to bank on a side, I'd say I'm bearish as of right now until we create SMT on the lows. Um, but yeah. If you see a clean high probably setup today, would you still take it after your winning trade? No, I wouldn't. Like I use my first bullet. Like I take max two trades per day, but if I win one trade, then I'm done for the day. So how my risk management works is one win, I'm done for the day, one loss, one win, I'm done for the day, two losses, I'm done for the day. If there is a huge displacement pushing upwards with multiple fair value gaps formed, which fair value do you pay more attention to? The first one you hit when coming back down, or let me think. I like to pay attention to the one in discount majority of the times. I mean, there's multiple ways I like to go about it. So where's the previous swing high that we just displaced through? Then I'll look at that fair value gap specifically because that's a breaker and a fair value gap, right? Another way I like to use which fair value gap do we have SMT within? Then I'll look for that fair value gap. And lastly is just like premium or discount for value gap. Yes, stuff, Tony. You have to worry about trailing drawdown? Not really. Not the way I risk, right? Because it's just I risk so little because I understand that I'm trading 20 accounts. So even if I risk little, I'm in perspective, I'm actually risking a lot. So if I risk, let's say $250, I'm actually risking $5,000 on a trade. So it's like in terms of like money, I don't really think about it too much because I split up my accounts into like a bunch, right? How do you manage trading on 20? I just use a trade copier and then I make sure that whenever I open a position or a close position that all accounts are in sync. That's pretty much it. There's not much to like not much else to it. It's basically trading one account but just splitting it up into multiple accounts just for like the psychological ease. Yeah. Yeah, these accounts are with Apex. Yeah. I think Apex is pretty okay. Personally, I don't usually recommend it. I usually recommend TopStep X. But, you know, if you have that self-control in your trading, then I don't think any firm is technically bad. It really just comes down to what the firm is itself, like who's running it, stuff like that. That's what's like makes it good or bad. But when you are a consistent trader, you know what you're doing, you have that self-discipline, you have that self-control, you quite literally just go with any firm, pass their challenge, start getting payouts. Tell me your risk management for funded accounts. I don't really have I risk management. I don't know. I feel like it really just comes down to like for me, I keep it really simple. It's like max 2 trades per day. One win, I'm done. One loss, one win, I'm done. And then two losses, I'm done for the day. I only risk 0.5% on each trade. And like, yeah, if you just follow, a simple system like that, it's just like, it's pretty difficult to blow your account, in my opinion. Unless you genuinely don't know what you're doing in the market, then you'll obviously blow your account because you'll keep taking small loss after small loss after small loss after small loss. All right, that's something to note down if you are doing that. But um, yeah, The Apex is better to buy many small accounts than one big account as your drawdown percentage on the big accounts are crappy. I agree with that. However, it's like once again, if you're just a consistent trader and you know what you're doing, like it might take a little longer to pass your accounts, but it's like once you do pass, you got like 6 million leverage. You know what I mean? Like that's pretty crazy. So I'm not encouraging anyone to necessarily do it, but I'm saying like if you are like really confident that you're a consistent trader, you've been doing it for a while, like why not? You know, because you're just gonna pass those accounts trading the way you are trading right now. It might take a little longer because the ratio is a little worse, but you'll still hit that target eventually, right? And that payoff is gonna be massive. What's your max risk percentage based on the size of account or on the max available drawdown? So I really base my risk off of max available drawdown majority of the time. If I'm trading a personal account, then I'll just risk like 0.5% or so. But even so, like in like prop firms, I usually risk like 0.5%, but on funded accounts, I typically like to risk like 0.33%, depending if it's like a large account, then I'll risk like 0.33% or so. Because I know like at the end of the day, the end goal of any trader is increase your capital but decrease your risk, right? That's the end goal. And then that, because you have more leverage, that just makes up the difference. Because at the end of the day, we're here to try to live to trade another day. You know what I mean? Ninja Trader sometimes fails to close all your trades. Always check that your position are closed when you press close. With Ninja Trader using Replicanto, I use Apex Trader Copier, but I also have Replicanto. But yeah, I always make sure that my positions are fully closed. But yeah, I think honestly, you should be looking at like if you're connected to Rhythmic, for example, you should be paying attention to Rhythmic, not Ninja Trader, because Ninja Trader will always, well, at least from my experience, it's always incorrect. So your real numbers are on Rhythmic, or at least my experience with Apex. And so you want to make sure all your positions are closed on Rhythmic, and that you know you're actually your orders are in the proper spot and all that. At what point do you take partials and set stop loss to break even? Do you have a rule about that? Yeah, so personally for me, oh yeah, I guess that is a good question. For me personally, I like to target the opposing liquidity. So it's like if I have a 15-minute SMT, then I just target previous session liquidity. If I have a 1 hour SMT, I target previous day high or low as liquidity. Um, and just increase like that. So wherever I have my SMT, I'll look for the opposing liquidity. And then once I hit the lower time from SMT's liquidity pool, that's my partial one, move stops to break even. And then after that, I'll look for the higher time from SMT's opposing liquidity. Do you risk down if you lose one or consecutively? I used to, but I realized that if I do that, I'm essentially telling my brain that, listen, we lost the last few trades. This next one, we gotta be real careful because it could also be a loser. And I'm training my brain to think that I'm trying to predict the outcome of every trade, and that's really bad, right? So that's why I'm consistent with my risk, because it's like I don't know if this trade's gonna be a winner or the next trade's gonna be a winner. It could be a loser, 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 and then I suddenly is like, oh, I'm gonna de-risk because I'm at a certain amount on my account. Okay, well, if I de-risk and I hit a winner, now I'm still down, even though I could have made back all my losses from that one trade. You know what I mean? So I no longer do that. I used to do that when I was a developing trader, but I was like, why am I training my brain to think that way? There's literally no point. I have a model. I'm following my model. I understand what the expectancy of this model is. I'm going to just trust it. Everything else is just a mental game. Now you can set different parameters for different models, because then expectancies for each model is very, unique to itself. So if you have like a really, really high probability model that has like 90% win rate, but it only appears once in a blue moon, and you want to risk 2% on that instead of 1%, which you usually risk, then go for it, because now you have a separate model for that, right? And the expectancy is different, but you have to keep your risk consistent per model, right? Can you shed some light on SMT time synchronization alignment? Had some SMT on London high. We need a 15-minute to confirm that, right? No, actually, yeah, we need 15-minute confirm London high, and then we need a 5-minute for time frame synchronization. Time frame alignment would be a 1-minute. Get consistent before you open 20 accounts. Yes, 100%. Because at the end of the day, if you buy 20, 50K accounts right now, I think it comes out to like 2,400 USD, like for the accounts and then activation. You better be consistent, because you get funded, you blow that. Like, you know what I mean? It's not the end of the world, but if that's like life changing money to you, you should not be doing that. Because you can always pass your accounts by full porting one of the big three news events, right? But like you're probably not gonna be able to do it multiple times if you're not consistent. Yeah, it also comes down to a mental game. Just like Jason's saying, like see if you're consistent with 5 accounts first. It's just about a consistency game, right? It's like same analogy with trading is like if you can't catch 5 points in Nasdaq every day consistently, or maybe not every day, but just 5 points consistently, then what makes you think you can catch 100 points consistently? Right? So 5 points. If you're consistent with that, go 10 points. If you're consistent with that, go 15 points, 20 points, 25, 30, right? You're increasing slowly. And it's the same thing with your capital. If you're starting with 50K and you feel very comfortable, then cool, whatever, trade that 50K. But if you're increasing it to $500K, suddenly you're so uncomfortable. You're like, oh, I'm risking so much money on this one trade, right? And I think the greatest way to overcome that personally is think in percentages. But still, we're all human. We're going to look at that number and be like, yo, that's a massive number, you know? All right. Sorry, I kind of went on a rant. 0.33% of total account size for prop firm accounts. Because then if I do that, then it takes me like roughly maybe 10 to 20 trades to like fully blow my account. And that's, in my opinion, if you lose 10 to 20 trades in a row, I feel like that's very low probability to do. Once again, it really comes down to your model, right? It's like if you have a really high RR and then really low win rate, then obviously you're gonna have to tweak some things. But for me, at least, I have faith I'll get at least 50% of the time right. Do prop firm traders pay taxes with their earnings in forex prop firms? I'm not sure what you mean by that question fully, but basically whatever withdrawal you make, that becomes your income stream because you're technically being paid as a independent contractor from the firm. And with that money, that's your income stream, so you have to report that and then pay taxes on that. So it's not all yours. Remember, you're self-employed, so you have to set money aside for taxes. Would you describe your model as MXM's bread and butter model and quarterly theory? I wouldn't say. I would say like, I wouldn't say it's like MXM's bread and butter. I think it's a very unique model to myself because I've like kind of put pieces together, and that's like every trader ever, right? It's like you just kind of put pieces together, and then you build your own model, whatever resonates with you. So I wouldn't say it's necessarily MXM traders or quarterly theory. I do use quarterly theory quite heavily, so I would say I'm leaning more towards quarterly theory, but I use MXMs as narrative. So I'll say I'm an ICT trader that is heavily reliant on SMTs. There you go. That's my model. Or that's what I would classify myself as. I was like, I guess. Your future prop firm, even if you get funded, you keep paying every month for the account. So you have the choice to pay like lifetime fee or monthly fee. Um, just depends what your intentions with the accounts are. It's like, are you here to just take advantage of the system and just get the biggest payout ever? Then just do the monthly fee. Because if you're thinking risk first, then like you're gonna blow the account, whatever. Then it's better to just pay the monthly fee. But if you're here for like, I'm gonna keep this account forever, and I'm gonna just get small little gains every month. Not well, it won't be small, but it's like decent sized gains, and I'm gonna keep this account forever. Then I'd go for the lifetime activation. But either way, I think the monthly is actually more value because actually no, you're gonna have to really study yourself as a trader. Are you a consistent trader? Because if you are and you're confident in it, then do the lifetime. But if you're kind of like boomer bust kind of trader as of right now, I would just go for the monthly. Yeah, exactly, Archie. But be sure to pay yourself as well. Don't just recycle all your payouts back into accounts. Like enjoy yourself, like you earned it if you got a payout. Treat yourself to like a nice dinner or something. I know so many people, they just take a first payout vacation, you know what I'm saying? I wouldn't. Is it okay to scalp 5 points like that? I feel scalping 10 points with more contracts feels a little more gamblish, but it is a good practice. And I wouldn't say keeps like it. When I say 5 points consistently per day or 10 points consistently per day, I don't mean like you're getting in, getting out, getting in, getting out, getting in, getting out, right? What I'm talking about is you're getting in, you're getting out, and if you took the win, you're done for the day. You're literally just done for the day. That's it. And that'll train your discipline. Be like, oh, I could have made so much more money. Like you're gonna think that for sure, but you're still developing trader if you're at that point. That is right, and it really teach you be like, whatever. I can always make more. It's a should have, could have, would have, should have, would have, could have. I don't know how to. I forgot which order it comes in, but there's always gonna be a shoulda, woulda, coulda. And it teaches you to think in that mindset. It's like it is what it is. Mention not de-risking arbitrary gains, not trading the P&L, but I think after losses in order to flatten the equity curve. Uh, no, I think personally is like once again for me is like I just never change. I literally never change my risk size. I only change risk size based on models, but other than that, I don't change risk size because I know that if I have winner, then it's probably gonna make back my losers. I place my TPs based on resting liquidities, so drawn liquidities. I've been in STBP. I've been in STBP since October 2023, and then I found profitability like early 2024. Yeah, no, I don't do that trade notes. Because at the end of the day, I'm thinking of percentage gains, right? It's like even if you have the same RR gain, at the end of the day, what did I realize? Right? I could care less about R gains if that risk per trade is not consistent. Yeah, Lucas. You're student loans with that first payout, yes, sir. Gotta pay. Honestly, I think the first thing anyone should do if you get payouts and stuff, or if you get any extra money, you should be paying off your loans first, because that's what's really gonna chain you down. That's what making you desperate for money, right? Is your debt. 1 hour profit now this week and have a runner, so hopefully finish 4 hour. Great stuff, Arch. Yeah, if I get a payout from Apex, I'm probably gonna donate 25% of it, give 25% of it to my parents, and then 20K of it, or at least, sorry, 50% of it will be used for taxes or myself, or put it back into a personal account. Because, like, one payout is pretty crazy from Apex. I'm not gonna lie. That is pretty crazy. Rocket, I'll go over the trade in STB so I can be more in depth. I'll go over it on Monday. I'll go over everything, and then you guys just make sure you like save your questions if you have any, if you're from STB, and then ask me on Monday. How do you hide your price scale on charts? So go to settings, canvas, I believe, text. I turn opacity to 0 and it disappears. That's what I did. And I think it is just so much cleaner just seeing pure price action. And wherever I hover, I can already see price, so it doesn't really matter that much. Jason break from social media or the charts? He's taking a break from social media, where he said it was draining. So with SAVP, do you just follow the course one lesson per day, or did you study hard until you went through that course? So what I did was I don't remember 100%. I think I went through like two lectures per day, But so what I would do is I would watch all the lectures first, right? That are available in the week. And then after that, I would watch them again and take very in-depth notes and then start applying it to the charts. And then the next week opens and I watch all those lectures and I watch it a second time, take in-depth notes, and then apply to the charts. Rinse and repeat. That's what I did. Glad to hear it, Tony. Took a very small win today. Remind myself to be happy. Good habits come first. Exactly. Like I could be scrambling for a trade right now. I'll be like, oh man, I was bearish earlier. I should have taken this trade. I knew it. You know, I could think like that, but I already profited. I'm fine, bro. Like I understand. Once again, the train comes around every now and then. You know what I'm saying? And when it does, you better get on the train. If you don't, you gotta wait for the next one. You know, that's just how it is. Their SMT on the low right now. Not that I'm aware of. Previous day low is very far away, I think. Yeah, it's very far away. So nothing I'm interested in. I actually will probably head off here pretty soon because honestly, once again, it's a Friday. I'm not looking for too much because we're already 20-30% within the range. We're starting to chop around with the seek and destroy profile, you know, like not much for me to really do. So yeah, type 1 if you're satisfied with the stream. Type 2 if, you know, you have any additional questions you want me to wait for. Any likes and comments on this live stream are appreciated as well. Yeah. So just type any final questions if you guys have any. Type 1 if you're satisfied with the stream. Appreciate you all for joining the live as always. Does this S&P that failed to take the high get rated and vice versa? Yes, when a new SMT is created. So if you have a SMT, if you have a failed swing point on the highs, right, then later on when you have an SMT on the lows, it'll come back to that high, most likely. Hey, chart. Do you ever finish the free course you were talking about making a few months ago? I'm not even done. I'm gonna be honest, I'm like 1/3 through it. It's just so much work, bro. You have your own course? I do. It's in the private community as of right now, but once again, it's like 1/3 complete. That's why I don't like actively like tell people about it. When are you actually live for non-members of your Discord? I think I'm gonna start doing lives whenever there's no news event. I'll go live on YouTube. Whenever there is high impact news event, then I'll go live for the premium. This is an SM to the upside. I don't see anything that interests me as of right now. So on that note, thank you all for joining the stream once again, and I hope you all enjoyed. Some choppy conditions today, and it's definitely been a tough week. So if you took some losses, you know, pat yourself on the back. Just make sure that at the end of the day, you got that risk management, that emotional regulation, right? And you got to really work on that because those are the two factors that make up most of trading. Technical analysis, anyone can do technical analysis. That's the easiest part of trading, right? It's mastering yourself that's hard. So on that note, take care everyone and have a great day.